Hey gang, good morning. It's Saturday morning. I wanted to do this quick video to talk about last week's market action. You might have noticed last Friday afternoon I sent you a video, or actually a screenshot, not a video, saying how the market closed right here at the bottom of this channel. And this Friday we closed above the channel, but right at the 50-day moving line, pretty close to the top of this channel, I would say. So the question is now, Roger, how did this happen? How did the market go up so fast? I lost 20-25% of all the gains I've made to the short side. Well, you're not the only one. I talked to several institutional traders and they're in the same boat. The only difference is their position sizes are much smaller than yours because they have a big account and they only allocate half of 1% to each position, where most of you guys have a smaller account and you can't trade position size the same way. But here's the thing. There's a good chance, we've had 2 gap days, there's a really good chance the market could come back down and go all the way to the bottom of this channel and can continue going down that way. So if your positions, if you're short and your short positions still look like they could be making money to the downside, I don't recommend you liquidating them. I could recommend you holding on to them. Now, with that said, November and December are typically bullish months. And when you have bullish months, you have seasonality towards the bullishness. So we have to watch this level very, very carefully. This is the 50-day moving average. I specifically colored it red so you could see it here. But if the market rallies hard from this level and goes above, say, 450 on the SPY, then we have a real breakout. Or maybe even right here above the 439 level, we have a real breakout. But there's a good chance that we can huff and puff and come right back down. Much of this was caused by short covering ahead of Apple's earnings and the Friday's jobs reports. Traders were getting nervous. So that's why you see this very strong rally. But this rally didn't have much volume behind it. This one to the downside did. So this upside didn't have the commitment from traders we were expecting, and it caught a lot of traders off guard, even professional traders. So number one, don't feel so bad if your shorts are against you. Most professional traders had the same experience. Look at this, 2 gap days in a row. That's a face melt-off rally, as we like to call it. You know, face melting rally. So, but again, we didn't close at the high, we closed at the low. And again, there's a good chance we'll be able to break down. And if we break down back into this range, there's a good chance some of those short swing trades will become valuable again. But I wanted to show you this channel, and I wanted to show you how it's building and how price is moving through it, and the fact that we may have some downside beginning of next week that will allow us to cover some of those shorts. Maybe not if we keep going higher, but if we go down based on this 50-day line, we will, and that's what I want you to pay attention to. And also, I don't want you to feel so bad by seeing your shorts running away from you. It happens to the best of us. And when you have a runaway rally like that, it's very hard to avoid it, even if you're relatively weak to the market. Now, make sure, if you're going to hold short, that your position is relatively weak to the market. Use the SPY and compare your position against the SPY to see if it's stronger or weaker. And if you have any questions, send me an email. I'll talk to you guys later, and I hope you enjoyed this video. Have a great day and have a great weekend.